weekend all. Ira Epstein of Linn Associates with your weekend edition of your financial update. And this is for Friday. And remember, our weekend edition works a little different, but we're Friday, March 22nd. How I work on the weekend edition is we're going to take a look at monthly chart, one of them, and then everything else is going to be on a weekly basis. So we get a little bigger picture. Then Mondays through Thursday, I go back to the dailies. And by the way, you do know that every single morning, I start you off with a morning subscriber video if you're a subscriber of me. And what I do in that morning subscriber video is I'm going to cover 40 charts. Actually, I'm up to 45 because I have ETFs. You asked and I responded this week. I got people that said they'd like these to come out earlier, between ideally 7:30 a.m. and 8. That's Central Time, well before the 8:30 opening of a number of other markets. I said, no problem. I got in the office today, did it, and now I'm buying equipment, so before I even leave my house, I'll probably be able to have these done maybe 6:37 in the morning. So I'm going to get these out to you in that way. But in these, I cover all the future sectors, but I'm able to say buy here, sell there. I can't do this in these videos. The law says I can talk generalities here. I cannot tell you buy here, sell there, you do this. But I will cover what I think. And these, of course, what I think the pros are doing. But I don't offer you anywhere near the same technicality and fundamentals I can do in my other charts. And, of course, chart action is all it's about. But the reason I do it is because I remember me being in your shoes. And, boy, I would walk around this building and the old Chicago Mercantile Exchange itself, knock on doors, and we were able to stay in the office to 8, 9 at night. We didn't have computers the way that you all do, and we'd pore over charts. Well, then the computer age came, and I was one of the very first to embrace it. I was probably the first guy I know to place orders on the floor electronically. And that was because we had the public business, and they only wanted big orders to be run into the pits, and there were the pits at that time. Different. But if you'd like to get all this, we'll go on that another time. It's www.iraepstein.com under research or education, morning subscriber video. Okay, so let's get back to the chart action. You can see behind me, it's a sea of red today. You know that this week the FOMC said basically they changed the dot plot, the probabilities of a rate hike through the end of the year close to zero, if not zero. The next thing, the slowdown in the world economies that Chairman Powell talked about. And today, we went back, first time in 3 years, in the Bund, German Bund, to under a negative interest rate. I think it might have finished down 0.2 or 0.3. So if you give them $1,000, you're going to get 2 or 3 tenths less back in 10 years. You heard me. No interest. Just hold my money, please, bank. Well, our rates, remember they were talking, we're going 3.5%, 4%. What if I tell you we're 2.435 now, 2.44 in the 10-year note here? And the market is nervous because you had curve yields change on you where the 3-month to the 10-year, you got a curve inversion. If you can make more money on the 3 or the same amount as the 10, why are you tying your money up? And what that does, though, is it shuts off business because short-term rates coming up. That's the theory. And by the way, often the lead time is anywhere from a year to 2 years before you get a downturn in the market. So the market issued warning signs. When we look at a monthly area chart of just closes, for the month, we're still up 25 points. You wouldn't know that if you come back to this chart, you're down 450 points today. The sky is falling in. The simple fact is sometimes looking at the weekly, monthly charts give you the picture. And the picture is you're still up and you haven't been under this 18-month moving average of closes. When I come to the weekly area chart of closes, up 2.75 points for the week. That is not a collapse in this. This market still has a pattern of making the higher highs. Now, what the market will gear on is it probably won't want to see the market close under last week, March 8th, actually, it's 2 weeks ago's low, coming in there of the 27.47 level. That will give traders the nervous sign, in my opinion, as a chartist. They get real scared if you get under the 18-week average, and that's 26.78. As you can see, you're in an area here where you've had resistance here in the past and back up here. You're about at this level right now, just about a little higher than that. The daily chart shows those resistance levels a little better. And as I've been writing in my newsletter, we've been inching higher on the daily charts, but not thrusting it out. And certainly we've gone dramatically higher since December. Anyone that thinks that's not a powerful rally, where have you been? The weekly chart's still in a bullish phase. You've got higher lows, certainly the higher highs. Where the market started getting sloppy was we had an outside week down. We then came back, took out that week's high, which often makes the market go higher. And now the market is starting to get a real bad piece of news as to what's going on with interest rates in the economy. When we look at the 18-week average of closes in red and the 100-week, the support's back at that 26.78 down to 26.54 level. But interestingly, on the weekly chart, that still would not take out the last break low. So that's still a very valid support zone in the market. In terms of reaching for the upper Bollinger Band, often on charts, I teach that when you take out the high of an outside week, the market makes a run to the closest moving average or the upper Bollinger Band. It made its run, but I don't think it's going to make it, given how we're closing this week. When I look at momentum, it is still up. It is not turned down. And on the weekly charts and monthly, I don't look to see if a market's overbought or oversold. I just look as momentum pointing up or down. Momentum has not yet waned. It could Monday, because when you start another week, the slow stochastic formula is going to take that into account, and it could start turning down, but it's still a weekly chart. It can turn on Monday, be back up on Tuesday. It's going to look at the range of the week to figure this out and where the settlement comes in. On the NASDAQ, you went right up into a resistance area and you stalled. Remember what we talk about. The Bollinger Band, think of it as a support number. You get down to it, I think pros are taking money off the table. That's not to say they can't sell the rallies again. It's not to say when they get up here they can't buy the breaks again. Do I think they're taking money off there? Yes. It's that simple. Momentum is still up. You've hit an upside target. The market still finished solid, but under the Bollinger Band, which is typically what it does. In the Dow, the market has had a pattern of higher lows. We've had the higher highs in place. Momentum is up. And while the market is down for the week pretty good, most of that decline happened because of today's 450-point work. So now the market's still here. There's nothing yet bearish on this chart. You have to take out 25,213 to create the pattern of lower highs, lower lows, and then I would say the support might come in at the 18-week average. When I look at the Russell, bad news. What the Russell did is an outside week down. It's got lower highs, lower lows. That is bearish. It's saved for the moment because it's over the 18-week average, which means the bias is up, and I would expect this is still going to be an attempt at a support zone. I will be watching carefully on Sunday night when you open, because you're probably going to see the slow stochastics do what they did this week. They began turning down. Here, let's see if I can bring you back here. Notice these numbers just going sideways basically over 80. And now they turn down this week. So while you may not see that well, you've got to turn down. So you got momentum down, you still have the bias up, and you've got the swing line pointing down. That's not a trend that's locked in. In the VIX, the market got down, and if you take a look into the support, remember last year we had such little volatility, you'd get a day or two and that was it of the volatility. You had this one big explosion in 2018 at the beginning of the year, and that was it. And it probably occurs, you get those explosions because traders, they lock in and they say, I don't need to take protection. Nothing's going to happen in the market. So they take the VIX down to low numbers. Well, if you look at the low number this week, you got down to 1237. And by week's end, you reversed up to the 1648 level. That's a pretty good reversal. And now you've got to watch, is your momentum going to start turning up? If it does, you're putting into play the 18-week average. Where the market's fought the battle is the 100-week moving average of closes. The trend is down. The bias is down. But the market is starting to come to life a bit. In the notes, what the notes did is they made a run for the 18-week average, didn't quite hit it, just missed it, got back over right through here, and then they went to play in the park, as I call it, at the upper Bollinger Band. And the market finished out for the week at 124.04.5, and the upper Bollinger Band is 123.27, slightly over it. But this is not something that, if you were to look from October, November of last year, 5 months ago, where interest rates were going, the new bond king, I think, was saying 3.5%, 4%. We're down to 2.44. So this market's surprising people. Take a look at what happened this week in your TLT. Remember, that could be potential resistance. You went up, challenge that resistance. The key to understand about Bollinger Bands, you don't have to hit that number and stop, but it's a zone. And it's a zone when you first break. It's a zone when you rally. It's something you should learn about, and I teach it in my charting course, which is on our website. If you're looking at the dollar index, all right, I think this is just a churn. I don't know what this is going to do. When I saw the Fed come out, I'll be honest, I thought that he is basically setting the market up for a dollar break finally because of low interest rates. And I was saying, okay, China's going to do stimulus. We know they're doing it already. And I would expect Europe pulled, screaming, whatever. Mr. Draghi and his crew made a terrible mistake in December. And they should have not stopped the QE. Just reinvesting the money, they need more money in it. Well, what the market's done is it's caught in that thinking. It doesn't know who's right and wrong. So you go to Bollinger top, make a low run for the Bollinger Band bottom 2 weeks ago. Now you're back halfway. Difficult chart. Eurocurrency, lower low, higher high. Euphoria was hitting the market just yesterday and the day before. Actually, the day before, and the day of the Fed, the market soared to the upside. As it turns out, by the end here, we're back to 113.79. The 18-week average is 113.95. You've got a lower low, higher high, and you're just hanging around that number, not doing anything. In the British pound, everybody talks how bad it is. That's not a bearish chart. You've got higher lows, higher highs. You're fighting a battle between the 18-week and the upper Bollinger Band. Momentum is still up. I'm not saying that Brexit can't happen bad. The chart action has been coming alive and betting the opposite. Canadian dollar, bearish. Lower highs, lower lows, under the 18-week average, momentum pointing down. If the market continues down, it might have to challenge that lower Bollinger Band. We know the resistance temporarily is that 18-week average. It's fought there now about, what, 3, 4 weeks, 5 weeks. In the Japanese yen, wow, market went for safe havens. And it just exploded this week, especially dramatic to the upside, as you can see. And we're back up to 91.56 as people are saying, get me out of European, get me out of U.S. currency. And for whatever reason, they love that yen. And as you can see, momentum turning up, the bias is up, and you're getting a crossover potentially here where the 18-week's going to get over that 100-week. Are we in a trend? No, but we ended a downtrend cycle. Do you see that? This week ended that. You came, well, actually, you didn't do it last week, you did it this week. That ended the downtrend cycle. So I wouldn't be surprised if the market fights a battle at those two 18 and 100-week averages. Bitcoin, I'll stick with what I said earlier, that I think the market was going to make a run-up, and I'm not surprised even if you get to the upper Bollinger Band on this chart. There's just, the chart action is such where the market acts like it wants to come up. This is a market that was recently down at the $3,100 range, and now it's back up here for all purposes at 39. When we come to the differences in the spread between WTI and OPEC, the Brent, you peaked out at 1068, you're back down to 804. When we look at Brent right now, momentum's still up, the trend up. You've got the higher highs, higher lows. Support down from here at 64.68. Resistance back at 70.28. You've hit your upside target in WTI. You hit the Bollinger Band area, and now you're pulling back to the 100-week. Yes, the trend is up, but you've hit some important targets. So just take that into account. And the market that is just staying strong and overbought is the weekly chart of Rebob, which is now several weeks in a row over that upper Bollinger Band. You know, it's spring. Do you really think prices in gasoline are going to collapse? I think we all wish they would, but the reality is spring and summer, early summer especially, people hit the road. And you can see in how prices are following the weekly seasonals. Nat gas, not out of the woods. Excuse me, you're running into that funny time of the year where cold weather goes away and moderate spring weather comes in where you still aren't burning a lot of electricity. So this works against this market, and you've got the lower highs, lower lows, which is bearish momentum, locked in bearish still, and bias is down. So that market's still very much in the bear camp. Remember what I told you about my morning subscriber video? You might want to go look at that at what? www.iraepstein.com, either under research or education. Have a great weekend. See you all early Monday morning if you're my subscriber.